Well, let's now look at Old Mutual CEO Julian Roberts. We talked to him this morning, talking about those first half results, particularly the impact of the South African economy on those numbers.
Well, I think what I'm most pleased about, the second quarter has been very good everywhere. Whether it's in our UK business, we've carried on growing our funds under management. Old Mutual Global Investors carries on growing. We had a slightly rocky quarter in the US in the first quarter, but the second quarter we bounced back strongly. Net cash flow up $3.6 billion. So very pleased with the way the US has performed. Rest of Africa growth has been 20% in the first half. And then South Africa, you mentioned in your introduction, Nedbank has done well, and so has
good numbers.
Well, so has the profits in the life business in South Africa are over 20%. So right the way through, the business has been performing well. But in South Africa, the economy has been slowing. There's no doubt the miners' strike, the two sets of miners' strike, has impacted the economy in the first half of this year. Fortunately, they're over now.
Let me ask you about the continent of Africa, because the headlines have been so negative around Ebola, and of course South Africa a long way from some of the concerns around the health crisis. But travel restrictions are starting to impact the continent as such, with many of the airlines stopping to fly to particular areas. Is this having any impact on your business at all? Are you putting in place any measures about when clients and customers come through different branches on the continent?
No, for us it's not significant.
It's still too far away for you?
It is, and I think where our operations are, they're relatively confined into major cities, and it's not being a problem.
Is there a potential for Ebola to be a black swan event for markets in your book? I mean, you know markets well, and this is something on your doorstep almost. Do you think it could crop up to be a bigger issue?
I don't think it will be.
That's certainly a relief, and that's what we're hoping to hear, that's for sure. I want to ask you a little bit about central bank policy too, because you've mentioned two strong markets, and the Fed has been very much looking at the data to ascertain when interest rates should go up. We haven't seen any movement in the interest rate curve really just yet, particularly on the 10-year. Here in the UK, there's a debate as to whether it will be this year that rates start to go up. What does that do to some of the investments and the exposures that you have across the board?
Look, I think the biggest issue for us is, for anybody with an emerging market, is probably more the continued tapering and quantitative easing and the end of quantitative easing. And what sort of impact, if any, will that have on emerging market currencies. Clearly at the moment, foreign direct investment in the emerging markets, because of the yield gap, is still very strong. But if that alters, then what is the impact going to be? So that's really one of my notes of caution, really, in the outlook, to say, well, what is going to happen in emerging markets with the end of QE in the US?
How difficult is it to deliver on this return on equity number in this environment that Karen's referenced, where central banks are really, or have squashed volatility and made selling a financial product quite challenging?
Yeah, I'm quite comfortable. We're in our range of 12 to 15%. We're in that mid-range. Interesting, the bigger challenge for us is probably with the lower growth in South Africa coming through. GDP has come down quite a bit. That makes it harder to get into the range. But really quite comfortable that we can meet our ROE targets. If interest rates, which I'm sure they will do, start picking up in the second half, probably in the beginning of next year, then that will also make it easier.